Hello and welcome back to another episode of the Investor Financing Podcast. And on today's show, we're going to talk all about self-storage facilities, which I personally am so interested in. And I think it's a great asset class because you don't have to deal with the toilets for one, and you just really own the shell and the ground, and there's less maintenance. And I think you can automate this business pretty well with the gates, and you could start out relatively small price point, and then you're not dealing with the bigger investors that don't want to waste their time on the small ones. So I think it's a great business to kind of scale up slowly. Most of us out here that are watching and listening, we have a lot of experience in flipping houses and buying rental properties, duplexes, four-plex. But we're kind of thinking, well, what can we do next? What's a good asset class to invest in that kind of correlates with our lifestyle that we want? We want to be more of a, even though I think self-storage is not necessarily real estate, I think I would look at it more as a business. Once you get it up and running, it could be a pretty semi-passive business. And the advantage of owning real estate too, which you could probably do your cost segregation and all that great stuff. Our guest today started in real estate, I believe, in 2012 as a house flipper, renovator. She quickly found out that she loves real estate. She's a natural born educator, so she's got like a group called REI USA where they do real estate invest. It's a real estate investing club where they talk about strategies on all sorts of topics. And then she has storage nerds and storage nerds. She also has an acquisition side of that where she buys with her husband, and she owns 11 plus storage facilities. And then she started a mastermind group where she helps people learn the business of self-storage. So we're going to dive into this today. It's going to be an action-packed show. Please welcome Stacy Rossetti to this show. Thank you for joining us.
Thank you very much for letting me come hang out with you today.
Yeah, this is great. So you got into real estate, you like flipping houses, and then what was the first like aha moment where you said, I'm going to look into self-storage, and then what was your first deal look like in the self-storage realm?
hmm Well, actually, so what happened was I got into real estate early on and like right in the best time, right? And I was buying houses for like 50,000, putting 50,000 into them, selling for 150,000. And I did this over and over. I did 100 houses in 5 years. And then I got pregnant. Right. So when I got pregnant, then I was at that time doing 10 rehabs at the same time. And then in my mind, as like a mother to be, I was like, how am I going to manage like 10 rehabs and then have like this little tiny baby? There's just like no way. Right. So what I did is I told my husband, like, that's it. We're not doing any more rehabs. And at that time, I was already kind of getting tired of it anyways, honestly. It's like too much work. I was running around like a chicken with my head cut off. So I basically told my husband, I said, we're not going to do rehabs anymore. And he was like, okay. And so because he's like so easygoing anyways. And I said, and then I also told my realtor, because back in the day you used to be able to just go on the MLS and find property, right? And so I told my realtor, I said, I'm not going to buy any more houses. And he was like, what? I just bought a brand new truck. And so I said, what I'm gonna do is I'm going to talk to all my lenders, because I had gotten very good at like raising money, right? Because if you're going to do a lot of rehabs, you have to raise money. So I got good at raising money, and then I talked to my lenders and I said, look, I'd like to do something more passive. I really need to focus on passive income. So I'm not sure what I'm going to do, but is it okay if I just roll that money over into like a something that I could do like longer terms are. And I had such good relationships with my lenders anyways, that they were just like, whatever you want to do, Stacy. And so I started on the hunt. And so like my realtor, he brought me like multifamily deals. And this is back in the day when, you used to be able to find like, good deals on the MLS. But I went over and I'd look at them and it all need like huge, big rehabs. And I was just like, no, I don't want to do this anymore. And then he brought me over like portfolios of houses, like 10 or 15 or 20 houses. Like you just buy a whole bunch of houses and manage those. But at that time I was just so sick of houses that I was just like, no, I don't want to do that either. So he's like, okay, I got something for you. I got you something really good. He's like, and actually it's only 20 minutes away from your house. I was like, what is it? And he said, it's a storage facility. And I was like, storage facility? Wow, I never even like thought of that before. So I was like, let me go take a look at it. So I drove over, and it was like 20 minutes away. And it was like when I drove up to this facility, it was like on the left side of it, and I drove up to the gate, there was like this huge pile of tires. like massive, probably hundreds of tires, just like had been sitting there over the years. And I was like, yeah, this is looking good, because I'm a rehabber. So like anything that looks horrible looks awesome to me, right?
Mhm.
And so, and then I looked in, and essentially, like, I looked into the storage facility, and there was like the one long, huge, like facility with storage in it. But then all around it was parking. And you could tell the owner was like, oh, just go find a spot, kind of a thing. It just really did not run this thing at all. And I was like, you know what, this is something I'm very interested in. And so I told him, I said, let me talk to the owner. Let's meet the owner and let's talk to him. So I met the owner and we walked the property. His name was Big John. It was Big John's storage facility, is what it was. And he was a little tiny guy, and he was like 86 years old. And he had the thing for like, 30 years. And the first 20 years were awesome. And the last 10 years were just like, he just was not into it anymore. And he had this thing on the market for like 5 years, and nobody had put an offer on it. He had it for $500,000. And so I heard his story. I listened to him. I told him, I said, okay, I said, John, I was like, I'm going to give you an offer on this deal. And this is what I had no idea about storage. I was like, I'm just going to give you an offer. And the offer was like, essentially, he told me he was making $2,000 a month. And I knew for my lender that I paid, like I paid 9% interest. So I just knew that I need to make sure that I could pay the mortgage. And if I had to come out of pocket for any expenses or anything like that, I would just come out of pocket to clean it myself. So essentially, I made him an offer for $200,000. So I knew that I could at least pay the mortgage, and that's how much he made, right, from what he made off of his income. And he was just like, $200,000. No, I'm not going to do that. And I said, okay, well, that's my final offer. But if you're really interested in selling it, I was like, I could literally buy this, tomorrow. We have the money or whatever. And he was like, no, I'm not going to do that. So then he called the realtor back the next day and he said, okay, I'll do $250,000. So I got this facility under contract for $250,000 as my very first facility. It was 64 10 by 10 units. And it was another, like, maybe, I mean, he had around 40 parking spaces, but but ended up now, I think we probably have like maybe at least 60 parking spaces because we just like reorganized everything. So we have like 64 units and then like 60 parking. So it comes out to about 125 spaces. We bought that thing for $250,000. The first year that we bought this, we had like no idea what we're doing. But the good thing that we did is that we made everything completely virtual. So we really focused on like how can we automate this so that we don't have to be here. It really truly is passive income. We cleaned it up. I think we put like $10,000. I called EPA. And EPA came and got all the tires because they said it was a hazardous zone. They came and looked at it, and so they took all those tires away for free. And then we started really cleaning the thing up. And the good thing is that we trained the tenants that wanted to stay to be able to follow our rules, to go online, to pay online. We created automatic payments. No more cash, no more checks, anything like that. And then all the new people that came in, they automatically were following our rules because that's just how it was. And so it took us and I was really afraid to like raise rents. I thought this is like a myth. Like this is like what people think in the industry is like, oh, everybody's going to leave. But the truth is like we ended up giving the tenants like 60-day notice. And I said, I have to double the rates. I'm sorry, but like you have to come up to market value. So I doubled the rates, and guess what? Nobody left. Not one person left. I was like so pissed because like I was kicking myself in the butt, right? So now I tell my students, like, as soon as you buy that facility, you let everybody know that there's like an owner transfer, you're transitioning into a new ownership, and at the same time you're raising rates to market value so that none of my students miss out on that. And then we also really raise our rates every 6 months. We raise our rates, but it took us a year to really kind of figure all that out. But the good thing is that like when COVID hit, right, all of these storage facilities were really trying to scramble because like nobody wanted to come into the offices to sign the paper and do all that work, right? So like all these storage facility owners were like really transitioning to become like what we call in the industry contactless. Right. So this is like a new term that just like came up during COVID. But the truth is that we were already contactless because we had done that. We had started it like several years earlier. So for us, when COVID hit, essentially we had around 1,000 doors, and like I think maybe out of 1,000 tenants, I think we had like maybe 30 of them that said they couldn't pay, their $50. And like, we took in a lot of new tenants because it was already automated. People just go online, book their thing. So over the course of the last couple of years, and ever since the very first one, I've just known that you can totally automate your facility so that you don't have to be there. You can make everything contactless, virtual, automatic. And the truth is that we live in an RV and we travel full time. And we've been doing this on and off for the last couple of years. We've been doing this now since October of last year. And we own 11 storage facilities, and we manage all of those facilities from this RV that I'm in right now. So I really feel that self-storage investing is like probably the one type of niche in the real estate investing world where you can actually truly have that like lifestyle that you choose, whatever it is. It could be passive, or you could have it right around the corner. If you want to have it right around the corner, I highly recommend not doing that. I recommend as far away as possible, so that you can really create passive income. But that's why I love storage. And that's really the story of our first facility.
I love it. That's a great story. So let's just quickly talk about how you teach your framework for teaching this business to investors, and probably most of these investors coming to you have real estate experience, just not in this asset class. So let's just talk high levels because we could go on for hours, and we only have a 20 or 25-minute podcast here. But when we're getting started, how are you training? Let's say, Beau, I live in Las Vegas. I want to, I'm open to anywhere, preferably the first one a little bit closer, just to, if I have to go there just to learn the systems and stuff. What's the framework? I'm looking for populations of 25,000, or is that like, what's a good range there?
So, yeah. So basically, the way I teach is find them, fund them, run them. Okay. So under find them, all right, what you're going to do is you're going to decide where you want to invest. And so there's in the storage world, there's essentially in commercial real estate, there's primary, secondary, and tertiary markets. All right. So primary, obviously, is where all the hedge funds are. That's where all the big money is. Like, this is like not for us. Like, we're mom and pop, right? So we're going to be either secondary or tertiary markets. A secondary market is going to be a population of 25,000 to 100,000.
Mm-hmm.
Okay. And so you want to think about where you are in your state and where you're living in your state. And every state has these types of cities. Now, you do not want to be focusing on suburbs of primary markets. You want secondary markets that are standalone secondary markets, right? So start thinking about in your state where those are. Any city that's by itself that's 25 to 100,000 is a great market to be in. All right. And so if you can afford, let's say anywhere from 500,000 to like, let's say $2 million, right? Then focus on like a secondary market. And you have to think of the 80-20 rule, right? So 20% down, and then like you can, finance 80%, unless it's a mismanaged facility, and then you have to raise the money and have private money. Okay. And there's two different types of facilities. There's mismanaged and there's income producing, right? Typically for us little people here. And so secondary markets are great. We have a lot of secondary markets. We invest in a lot of secondary markets that eventually will become primary markets as well too, which is a very good investment to be in. And then you have the tertiary market, and tertiary market is really just country, like little tiny towns, population of 25,000 or less, right? And it doesn't matter if it's 1,000 people or if it's 25,000 people, because in all of these little tiny towns, there's storage, right? And, just as long as it's not oversaturated, right? You want to make sure that you look at the population within a radius. So in self-storage investing, it's all about a radius, right? Is it a 1 mile, 3 mile, or 5 mile, or 10-mile radius, depending on, primary, second, or tertiary market. In a tertiary market, you could say, I'm going to look in a 10-mile radius, and I see within that 10-mile radius, there's 20,000 people, right? So I know that I can divide that by the total square footage in that area, right? So really it's total population divided by total square footage, all right? And that number should be between 6 and 8. So 6 and 8 square feet per capita. So that's just kind of a quick formula. And I don't want to get too deep into that. But so you just want to make sure a couple of things. You want to make sure you're going to think, what can I afford? How much money can I put down? How much money can I come up with? I'm awesome at raising money, so I can go out and raise money and look at any deal. Or I know I have $50,000, so that's going to afford me X amount of storage. So I'm going to look in a tertiary market. Okay. And I buy in tertiary and I buy in secondary, but what is a very, very good market right now is a secondary market, but it's like you're looking in the tertiary, you're looking in the outskirts
It's
of
like
the
an
city.
emerging tertiary market that's gonna
It's an
where people are.
emerging, yes, the
Yeah.
emerging tertiary market that's going to become a secondary market, which is
Now, for,
also a great area. Sorry, go ahead.
what about unit count for our first acquisition? Where do you like us to be there?
For what?
Size, how many units or doors?
I mean, honestly, the truth is, I got students all over the place. So, like, I have one student, his name is Matt, and he buys like facilities that are like 30 units, but they're on like 3 acres.
So we
And then
can build
he
more.
he he wants to expand, and he also makes sure they're in that like secondary to tertiary market kind of a thing. And then I have some people that are just like, no, I want like 150 units. Really, so basically, what I kind of say is just a rule of thumb is like and people just have to get in mind that like the storage investing world is like slow and steady wins the race, right? It's passive investing. You're building a portfolio, and if you want to replace your income, like essentially you just have to know that typically on average cash on cash return is around 10%, 10 to 15%. It's definitely higher than multifamily or rentals, right? But I mean, if you think about it, $1 million property makes $100,000 and that's $10,000, right? So
Hmm.
you're not going to be getting rich off of just $1 million property. But what's really good about $1 million property is that you can 1.5x or 2x that facility very, very quickly on most of the time. Because what's happened in the industry is that mom and pops, have not increased their rates. And they cannot increase their rates as fast as the market calls for. Right. So because typically mom and pops, they don't even like to increase rates anyways, a lot of the times, right? A business owner like me, we know you should be increasing your rates every 6 months. But a typical mom and pop, they haven't increased their rates since like before COVID because they don't want to be the bad guy. And they have this facility in this town of 20,000 people and they don't want to make everybody mad because, five of those people are their cousins. And then like 10 of them are like, their friends that they're giving 50% discounts on and stuff like this. You know what I'm saying?
Yeah.
So those are the really good deals too, because you want to look for severely mismanaged facilities, or you want to look for facilities that are considered mismanaged, but it's just because they haven't increased their rates as fast as what the market calls for.
Hi, if you'd like to book a call with me and discuss SBA financing, whether it's a 7A or 504, or you just don't know where to start, maybe it's a startup business, you're buying an existing business, you're buying a franchise, you're building a new office building, you want to expand your existing business, we have multiple solutions. I can walk you through the 7A and the 504 and the SBA loan process. And if you have any other questions on any other types of financing, I'm happy to book a call with you. The link's below. Look forward to seeing you soon. So your mastermind group, do you have this education recorded? And so you have like your initial stuff, all this kind of due diligence, finding off-market deals, negotiating the deal, deal calculator, like here, plug these numbers in. This is what you're looking for. And then does your mastermind get together online like once a month? What does that look like?
So we do actually. So the way that my coaching program works is we do one-on-one coaching calls on Mondays if you want to talk to me, right? We do Tuesday, every other Tuesday mastermind. So it's twice a month mastermind, and then we do boot camps once a quarter. And then you have access to like essentially the community. And the truth is like the community is what's awesome because like you have me as a coach and you also have my husband. I do coaching calls on Mondays and my husband does them on Fridays because I find them and fund them and then my husband runs them, right? So essentially once you get that deal under contract, you pushed over to my husband and he helps you really onboard that facility and helps you get it up and managed properly, right? So you really have your hand hand held the entire time. As long as you want to stay in the coaching program, we're there to hold your hand and walk you through the process. So, you'll get anything that you need. It's called Storage Nerd. So if you're interested, check out storagenerds.com. That's our coaching program. We also offer an acquisitions portion to that. So if you're like, I really want to own a storage facility, but I ain't got no time to get out there and look for the deals, then you can actually hire my acquisitions team and they'll find a deal for you.
Oh,
Right?
wow.
Yeah.
That's pretty good. And do we pay like almost like a wholesale fee, or is it just a flat rate?
I do. Well, essentially, what I do is you pay an upfront fee to pay for the VA to look for the deal for you, and then I get a little cut in the deal in the back end.
Okay.
Yeah,
Very
that's
good.
cool.
I think that's well worth it. Like for me, I'd just be like, okay, let's get to somebody that's been doing this to to serve up a good deal for me. And this way, I think a lot of real estate investing. I remember when I did my first flip, like 12, 13, whatever, 14 years ago at this time. And you're so nervous, right? Like you don't know anything about construction. You don't know anything. And although you've done that, and like now I feel like, oh, well, I've done it. I know the pitfalls. And when you go into a different asset class, you're just like, okay, I just want somebody, the training
Tell
just to
me what
say,
to do.
this is what you need to do. And then once you do your first deal, you feel pretty confident. Maybe you do two or three, you need a little bit of hand holding. And then from there, you, in theory, should be like pretty much self-sufficient, where then you just have your own kind of appetite that you want. That's sounds like really, really cool. I think I've been saying that. I was talking to one of my mentors, and I was like, I want to get into self storage, and he does too. And he owns $600 million of real estate, but he doesn't own any self storage now. So, anyways, it's good. So if I cut my teeth and kind of learn this business, and I like the fact that it's slow and steady, right? And my day job is doing loans, and that's transactional based. I love it because I'm a creative deal structure. I know how to finance stuff. I know how to get
Yes.
crazy deals done, which is a great skill to have because when I'm buying real estate myself, I know exactly how to structure
You'd
it.
be a great asset to the group. You should really think about joining now, and that way you could really like learn how to invest in self storage, and then I could also hold your hand. I could help you find one if you want to. Now for the acquisition side, just so everybody knows, because I know a lot of people are interested in that, you have to become what's called a legacy member, which means that you are like the next level up. So you have to be because like legacy, essentially what that means is like I'm going to hold your hand. I'm not going to just find you a deal and then like you leave and do your own thing. Like I want to be there so we can help you to manage it and get it up and running properly as well too. So you would become like a legacy member, then you would pay for the acquisitions like team to have them kind of work on that for you, and then I would get a little cut in the deal on the back end. That's kind of how it
That's
works.
that's amazing. Uh, Listen, we can go into. I'd love to have you back on the show. I think we just kind of touched the surface today, but I think I'd love to have you do it. We'll do a deep dive next time when you have time, and we can really touch on this. But I am seriously going to look into this because I think, hey, this will be fun. And the great thing about what I do too is I'll probably meet a bunch of people that need money. So,
Yes, that's
it's
what I'm saying. Like you'll be a
yeah.
great fit. And so, and just also for everybody to know, I teach for free every Monday night. Okay, so you can go to stacyrossetti.com and just come and hang out with me on Monday night. So if you're like, oh my gosh, like I don't know for sure if I really want to get into it, come listen to me every Monday night. stacyrossetti.com, sign up, and after a couple of times, you're like, yeah, I really like it. I want to look at George Nerds, and I'll get into the coaching program. Okay.
That's so cool. Yeah, that's awesome. Everybody, I'm going to put the show note in the show notes. I'll put the links there so you have it. I'm going to sign up and become a student just so I can, fast track this and get my first storage facility here as we go into this recession. I think there'll be some wonderful opportunities for people that are ready to strike. So this time around is a lot better for me than 2007 and 8. That was a bad time, but this time,
I'm so excited about what's coming up. I'm so excited. Another thing too, I want to just let everybody know. I also have a fund. All right, it's a 506c fund. So if you're like, I really want to get into storage, but I don't want to do any other work, you could just be a passive investor as well too. So make sure you check that out as well too. It's stacyrossetti.com/fund. All right, and I also pitch that as well too every week, so you could hop on the pitch as well too.
oh, very good. Guys, I hope you enjoyed this episode. I'm fired up and excited to kind of dive in. And I think at the end of the day, it's good to have your doors, your single family, your duplexes, your fourplexes, your small multifamilies, but also I think diversification, and then get your first property, see if it makes a big difference then versus your rental properties. And you can do both, and you can do more than both. You can do other asset classes too. But I think like what I hear from Stacy is that she found this. She was just had a child. Rehabbing houses is a job, where this is a business, and that's the difference. So anyways, I hope you enjoy the show. Stacy, that was so awesome. I really appreciate you. I'd love to have you back on the show. And guys, I'm putting her links below, so check her out if you haven't already seen her, because I was following you for a while. So you're pretty much everywhere too. So
Yeah, I'm everywhere. Just Google my name, you'll find me.
thank you so much.
All right, take care. Thank you.